Did one of the biggest stock opportunities of the year just quietly appear? That's the question investors are asking after SpaceX shares slipped below the psychologically important $100 mark just as more than 900 million previously locked-up shares became eligible for trading. At first glance, that sounds like terrible news. But some market veterans believe this moment could actually be creating an opportunity that long-term investors have been waiting for. Here's what's happening. The latest milestone isn't about a failed rocket launch or disappointing technology. It's about something every newly public company eventually faces, the expiration of its lockup period. 4 months after an IPO, employees, executives, and many early investors are restricted from selling their shares. Once that restriction ends, millions, or in this case hundreds of millions, of additional shares can enter the market. That sudden increase in potential supply often creates volatility, even if nothing has changed about the company's actual business. Reuters reports that roughly 20% of eligible insider shares can now be sold, increasing concerns about short-term selling pressure, while analysts note that insiders are under no obligation to sell. But that's only part of the story. SpaceX has already been under pressure since its public debut. After an explosive start, the stock has fallen well below its IPO price, leaving many investors wondering whether the market simply got too excited too quickly. Concerns over valuation, operating costs, and broader weakness across parts of the technology sector have all weighed on sentiment. When a stock is already struggling, a major lockup expiration naturally raises fears that even more selling could push prices lower. Now here's where things get interesting. Not everyone sees this sell-off as a warning sign. During discussions on financial television, several market strategists argued that prices below $100 could represent an attractive entry point for investors with a long-term outlook. Their reasoning isn't based on today's headlines. It's based on the belief that temporary market mechanics don't necessarily reflect a company's long-term potential. A lockup expiration changes who can sell the stock, but it doesn't automatically change the company's technology, revenue prospects, or competitive position. Of course, that doesn't mean the road ahead will be smooth. History shows that IPO stocks often experience significant volatility during their first year on the market, especially as additional shares become available. More scheduled unlocks are expected over the coming months, meaning today's event may not be the last major test for investors. Some analysts believe those future unlocks could continue pressuring the share price before the market eventually settles into a more stable trading pattern. Another detail many investors are watching is whether employees and early backers actually choose to sell. Just because they're allowed to doesn't mean they will. Some may decide to lock in gains or diversify their finances after years of holding private shares. Others may continue holding because they believe the company's long-term growth story remains intact. That uncertainty is one reason lockup expirations often create so much market drama. Until trading activity becomes clear, investors are left guessing how much additional supply will actually reach the market. Meanwhile, the bigger debate hasn't changed. Supporters argue SpaceX remains one of the world's most ambitious aerospace and technology companies, with businesses spanning commercial launches, satellite internet, and future space exploration. Skeptics, however, continue questioning whether those long-term ambitions justify the company's valuation, especially in a market that's become much more selective about high-growth stocks. Those competing views are likely to keep volatility elevated for some time. So what should investors take away from all this? The lockup expiration is certainly an important event, but it's also a reminder that stock prices can move for reasons that have little to do with day-to-day business performance. Increased supply, investor psychology, and market sentiment can all drive sharp swings in the short term. Whether this drop ultimately proves to be a buying opportunity or simply another step in a longer correction is something only time will answer. For now, one thing is clear. SpaceX has entered a new chapter as a public company, and Wall Street will be watching every move. If insider selling remains limited, confidence could improve. If heavy selling emerges, volatility may continue. Either way, the next several weeks could play a major role in shaping how investors view one of the market's most closely watched companies. If you found this update helpful, don't forget to like the video, subscribe to Unix Media, and turn on notifications so you never miss the latest news. Thanks for watching.